All right. So this is Myth with Ascent, and I'd like to introduce to you Omar Khan with Boardwalk Wealth. He's a sponsor, experienced sponsor who's been doing lots of deals all across the country, but definitely focused in Atlanta. And so we'd like to talk to him about the Atlanta market and kind of get to know it a little bit better in depth with someone who's boots on the ground.
Hey, Myth. Hey, how's it going?
Great. How's it going with you?
Hey, very excited to talk about this. Let's get rolling.
All right. So, like I said, we're going to be talking about Atlanta here. All right, Omar. So, tell us what you liked about what did you like about Atlanta? This is kind of the big picture overview of the numbers, but give us a little bit of flavor for what you think about it.
Look, you can see all the stats. So obviously Myth will go through the stats and give you more context there. What I basically like about Atlanta is the similar thing about what I liked about Florida and Texas to a certain degree. Number one, jobs. Tons of jobs are moving here and diversified jobs. It's not like a one-trick pony. Number two, the income growth that's happening is spectacular. And to give you some sort of a historical context, through the course of American history, especially after Civil War, you see a great migration of, say, minorities, African Americans moving up north to get more economically advantaged opportunities. Well, what we're now seeing is that migration, in a certain degree, has shifted back. So a lot of folks that moved up north, say 1 or 2 or 3 generations ago, a bunch of those folks are moving back. And these are folks that are college educated.
Right.
They've got high income jobs. And typically when one person is college educated, we've seen stats that their spouse or partner is also college educated. So these are people either that are moving up or upper middle class and going up. So the quality of jobs and the income growth that's coming in is very high quality. Then, as we talked about, the diversity. So the diversity of industries here is very important. And the funny thing is, Atlanta is a cultural and economic center, or one of those capitals of the South. So one of Atlanta's actually mottos, even right before the civil rights movement and after the civil rights movement, was too busy to hate. Right? They're just too busy. There's too much business going on. We don't have time for all this other stuff. So unlike what you hear a lot about in the South, Atlanta's motto's always been, look, there's enough for everyone. Let's just get rolling. Let's do the business part of things, right?
Right.
So that's what really attracted me to Atlanta, apart from the fact that it's a growing, well-diversified economy.
Awesome. Yeah, definitely from the numbers paint the picture here with the predicted rent growth. I think we've talked about it between high 2s and 3%, meaning there's lots of demand for housing here.
And just sorry to interrupt, not just that, this 2.9 that you see is, by the way, the average maybe across the metro. But when you're picking, say, places like, for instance, not to toot my own horn, but I have say assets in Fayette County and say Covetta County, which is on the south. You'll see if you go a little down on this map. There, the rent growth is 5 or 6%. In places like Sandy Springs, Marietta, Kennesaw, Johns Creek, Clarkston, rent growth is like 4, 5, 6% in certain cases. So the 2.9 is very healthy metro-wide.
Right.
But when you're actually specifically picking submarkets, the rent growth is sometimes double or triple.
And Omar, what have you seen with COVID? Because in a lot of the other markets we're looking at, there's a lot of flight out of the urban core and downtown into the suburbs. Is that true for Atlanta as well, or how has that played out?
Look, to be very frank with you, I have not seen that happen. Core assets, even say core or core plus, or you're not right in the core, but you're on the periphery.
Yeah.
They're actively being traded because, again, the reason is when you have so many jobs moving, and these aren't jobs like, say, $50,000 job, right? These are 100, 200, 300 grand jobs. And these are with people, as an example, I'm sure you'll go through it. Google, McKinsey, Facebook is actively expanding their presence in the city. So these are people that want to live in and around the Highline area, which is kind of midtownish and kind of goes around. So these are people that want to live in the city because they want to get that feel. They don't have kids. And a lot of assets that are trading actually are going higher and higher in prices, as opposed to stalling or kind of going sideways.
Got it. So then with coronavirus, it's just kind of not as much of an effect on Atlanta. At least the numbers tell a picture that they're doing.
Nope.
They've, the initial, so we're comparing here with the blue line being actually the national, and then Atlanta being in the orange line.
This is a job growth. You've got to realize this doesn't mean people have lost their jobs. There's lots of job losses. I'm not saying that, but growth is different than the absolute number of jobs in the city.
Definitely. and you're seeing that they didn't have as much loss of the growth like you're saying.
Yeah. And
and
they've rebounded pretty quickly as well, relatively speaking.
Definitely. We can even flip over here just to see, like you're saying, the big companies. I mean, we all know about, obviously Coca-Cola being huge in Atlanta as well, but then Delta, of course, being headquarters as well. But, Google and Microsoft, all these companies are coming. Is that driven by universities, or are they trying to pluck into Emory and all those other kind of universities down in Atlanta?
Well, Georgia Tech is a big one, by the way. Don't
Right.
forget that. So look, number one, Atlanta has Georgia Tech used to be, or I think it's still not used to be, it's still one of the highest rated engineering schools in the country. So Georgia Tech is a powerhouse, you've got to realize. But Atlanta's, at least with regards to the South, Atlanta has always had very nice education, and not just, and I'm talking all over the spectrum, right? K-12, say undergrad, and then postgrad. So number one, so you've got to realize it's already got in place a very talented, highly educated labor force, number one. Number two, cost of living in Atlanta relative to the coast is, it's laughable. It's still very funny because I lived in Toronto. I got lots of friends in New York and the Bay Area. And what's really funny, even in places like Texas or Atlanta, is the only people complaining about the cost of living are people who've always only lived in Atlanta or Texas. So anybody who's a transplant coming from New York, Boston, Chicago, the Bay Area, LA, Miami, they're like, holy moly, this is so freaking cheap for the amenities, for the quality you get. So you already have a very good base of people, highly educated, high-income earners. Now you've got the cost of living is relatively cheap by a lot. And you have the ability to grow. So unlike, say, the Bay Area or, say, New York or Boston, where even if you have the capital to grow, sometimes you just run out of physical real estate. You just physically run out of office space. Well, Atlanta doesn't have that problem. And the city has actually rolled out the red carpet in terms of tax incentives. So that's really attracting a lot of these people to move.
And as someone who's only visited Atlanta briefly myself, how do you think is the infrastructure, the traffic is obviously a big thing people think about when you're looking at places and looking at submarkets. Do you think about commute time into downtown Atlanta, or like how do you visualize that, and how does that kind of come into play?
So look, Atlanta is renowned for having, or at least used to have, really bad traffic, relatively speaking. I don't know if you know about it.
Yes,
it
definitely.
Used to have, like, Atlanta is the only big city I've gone to pre-COVID, where apart from LA, obviously, where I've seen like a 10 or 12 lane highway and it's jam-packed.
Right.
Yeah, literally jam-packed. And you're like, dude, like, are you serious? How many more lanes do I need? Right. But that being said, Atlanta has a very, to a certain degree, again, this is the South, so you've got to realize this is not the coast. Atlanta has these pockets where they are trying and have made it very easy for you to transport yourself within the pocket. So for instance, if you're in a particular core in downtown or around the High Line, or not Belt Line, sorry, it's similar to the High Line in New York, where technically you can kind of walk or take a bike path all over like this little area in the city.
Yeah.
It eventually is going to go all the way around. So that helps you in transportation. Now, big picture wise, are there infrastructure issues? There are always going to be infrastructure issues when the rate of population growth is so much higher than anybody could ever predict. But is that holding Atlanta back for the time being? For the time being, no. It's not as bad as, say, California, New York, Boston. But the city has taken a lot of steps and devoted a lot of resources. But that kind of remains to be seen. So far, it's not proven to be something of a hindrance to people so far.
And so for the average Atlantan, what would you say is like a reasonable commute? You'd say most renters, if they're working in the downtown.
But that depends on, most renters don't live downtown or midtown, or relatively speaking.
Right.
Because for instance, the metro is so big. So I think if you go from Johns Creek, because I was doing this math for one of my investors, if you go from Johns Creek to Newnan, we're just closing on an asset.
Right, definitely.
I was looking at the Google Maps and it was saying something like an hour and 40 minutes drive. And that's a pretty freaking big drive if you think about it, right?
Yeah, definitely.
But you've also got to realize it was something like 60 or 70 miles. Or 80 miles. So you are going through the core. So the city is pretty huge. You've got to put that into context. I mean, it's pretty freaking huge.
Right. That's a flavor which I didn't really appreciate, because I mean, Houston's a really big city.
Oh no, dude, Houston is like anywhere you want to go, it takes you 2 hours to go.
Right, exactly.
Yeah. So Houston is sprawl. It's not as bad as Houston, right? But look, it depends where you are in the city. Is sprawly or non-sprawly? But the thing is, a lot of folks, what they do is, so as an example, if they work at the airport, right? And these are, say, pilots, engineers, that sort of stuff. They live in, say, places like Fayetteville, Peachtree City, Newnan, because the commute is very less. They won't be coming from a Marietta or an Ackworth or Johns Creek, because Fayetteville, Peachtree City, Newnan are on the south. The airport's on the south.
Right.
Now, if you're coming from Marietta, which is in the north, now that's a big problem. Similarly, people who work in Midtown Atlanta probably aren't going to be living in Fayetteville, Peachtree City, or Newnan, because you'd have to go all the way up. So what a lot of people end up doing is they end up matching where they live somewhat similar to where they work.
Right. And this seems to kind of be like the theme of what you're discussing here, is like, it's so submarket dependent, right? Because the jobs are the jobs are in the submarket, and you have to be able to, when you're looking at properties, you have to make sure it has a robust submarket economy, even though
that area, for those people, all of that stuff. Yeah. Absolutely. So it's very micro specific. Macro is important, but you got to take that micro look as well.
And this is just kind of painting the picture here, just reinforcing just all the big companies that call Atlanta home: Home Depot, UPS, Delta, Coke. All these.
And this is, by the way, the big companies. You have no idea, like, say, places like, as an example, MailChimp. It's like a $3 or $4 or $6 billion company now, surprisingly.
Interesting.
Oh, yeah. MailChimp is huge.
Right.
And they've got a presence, I think, in Midtown Atlanta. So it's not a Fortune 500 company, because it's still a private company.
Right.
But it's still a pretty big company if you think about it, right?
Right. Obviously, we're noticing all these high-tech companies moving out of Silicon Valley, particularly into Texas, Austin in particular. Yeah. Have you seen a lot of them flocking from New York City, the actual company headquarters actually moving down to Atlanta?
I haven't, personally speaking, but you also have to realize that if you're talking specifically about financial companies or investment management companies, they have always had a big presence. So say a Goldman Sachs or a Morgan Stanley's and the JP Morgans, they have always had a huge regional presence in Atlanta, because Atlanta is one of the gateways as a capital, like a source of finance for a lot of cities and businesses in the South. So if you have a presence in Atlanta, as an example, that basically means you've got a presence in the Southeast, stay all the way up to, say, maybe Miami, right? Miami would have its own little cluster, right? So Atlanta has always served as a gateway to the South. So a lot of these companies have always had a very significant presence. So they might not move their headquarters, but that's only because they've always had a very significant presence here.
Right.
So it's one of those things where you hear these headlines, but you've got to put it in historical context.
Right. Like what's already there. I mean, it's already very well built out.
And private equity is huge, by the way. It's very surprising. A lot of people don't know this. Private equity, venture capital, and similar healthcare related financial activities, as opposed to just healthcare in and of itself, which is huge, are huge, because that Atlanta serves as a conduit for the South, excluding, say, Texas and maybe Southern Florida. So all the other areas of the South, Atlanta is a gateway for that.
Right, it's a huge catchment.
For capital and finance and those sorts of stuff.
Right, makes sense. So this is kind of just the big picture overview of Atlanta as a whole. Obviously, there's a lot of units being delivered, but a lot of absorption as well. In the submarkets you're looking at, and you're thinking, how does new construction? Is there a lot of new construction, and how does that play out, or is a pipeline drying up?
Well, it depends. You've got to realize I'm typically also not targeting the type of resident that is going to be going towards a Class A luxury new construction product, simply because they cannot afford it, right? So I'm in the B-ish space. So the difference between me and a Class A rent is anywhere from $500 to $800, maybe $300 to about $900, depending on the floor plan and all that jazz, right?
Right.
So if for me personally,
that's renovated, Omar? Is that renovated?
Yeah, renovated even. Because look, a new product that's coming online in a Class A type building, that is catering to a very different type of resident. Right now, I'll say if you're working class, I don't necessarily just mean the strict book definition of it, right? What I mean is, let's say you're a family that makes $60,000, $70,000, $80,000 a year. Well, look, if you've got 1 or 2 kids, you might be making more than the national average or the Georgia average, but it's not like you can afford paying $3,000 a month in rent. Right. I mean, that's not going to happen. So, and if you've got 1 or 2 kids, you probably at least at the bare minimum need a 3-bedroom. Right. So if you need a 3-bedroom, getting a 3-bedroom in a luxury say a Class A building, first of all, you might not even be able to get it. And if you do, that's probably like $2,700, $3,000. So you can't afford it to begin with.
Right.
So absorption is, by the way, very important. That's a stat I do look at. But the type of resident that I'm targeting, they don't necessarily care how much luxury product is in the market because they can't afford it to begin with.
Got it. That makes sense.
But it's a business model. That's my business model. Somebody's
Right.
in Class A, they've got to focus a little bit more on that.
Right. And this is, I know we talked about this a little bit, but I'm just curious, as you're looking at your renovations and your Class B tenants, but you're still trying to create a really great product, and I've seen a lot of your presentations. What do you think they're really looking for? Like, for example, is 9-foot ceilings? Do you think that's a big deal in your
It's
Atlanta
nice to have, but it's not a deal breaker.
So have you? And this is like an age-old question, but do you think they really walk around and they notice it? Like, would you? When your leasing office says, oh yeah, people walk around, they're like, oh, those ceilings a little bit low, or is it something that doesn't really come up in conversations?
Look, I can tell you this, number one, it's something that is noticeable, number one.
Yes.
But you also have to realize that the typical B-ish type sponsor, they'll eventually tell their resident, if they don't say it explicitly, they're saying it implicitly. Look, you get what you pay for. So look, I'd love to have a private jet. I'd love to go private jet everywhere, Ferraris everywhere, but you get what you pay for. So whereas a 9-inch ceiling is obviously more preferable to a 8-inch ceiling, 8-foot ceiling, obviously, it goes without saying. And more is, it's a little better than less, but look, I can give it to you. Do you want to pay an extra $300? And that's where the rubber meets the road. So amenities, as an example, there's a race to providing more amenities on the Class A space because, well, how else do you stand out? You got to give something, right?
Right.
But on the Class B space, for instance, I know, for instance, washer and dryers, like sponsors actually providing washer and dryers, and they charge you $40, $50. That's a big thing in Texas, right? Not as big as in Atlanta.
Interesting.
Because the game with Atlanta is, it's just the demographics, the way things work historically. That's just not a big thing. Most people have their own, and you sometimes, not always, you'll get a lot of pushback depending on the submarket.
So when you're doing your renovations, what have been really big, good returns on investment?
Lighting fixtures, number one. Lighting fixtures, countertops, bathrooms have to look good. The pressure, you'd be really surprised. Women notice this more than men, actually. The pressure of the water coming through, say, especially in the bathrooms, but also in the kitchen. Like when you just open the tap, how does the pressure come out of the water?
Okay.
Is it dripping or is it going more? Of both the sink and then when you're taking a shower. That's a big one. But lighting fixtures, I can tell you. Lighting fixtures, and USB ports. You buy this $5, $10, whatever, plug-like attachment that has a USB port. Dude, you'd be surprised. It is one of those things that nobody thinks about going into it. But as soon as they see it, they're like, oh, this is pretty freaking great.
Well, as soon as you have it, you can't go back.
You can't go without it, right?
Or as soon as you had it, yeah.
Or in fact, not even have it. As soon as you see it, if you're touring, it's one of those things that is so weird. It's like a $5, $10, whatever, $15 thing you put on.
Right.
And even if somebody didn't have it in their mind, they see it and then they just can't unsee it after that. So it's one of those things. I personally feel stainless steel appliances, at least in this B-ish space, are completely overrated. A lot of sponsors will tell you that they're doing it because, again, it sounds sexy to say stainless steel versus black appliances, but it's not really. And
what kind of countertops are you putting in?
So it depends on what area I'm in and what's happening in the market. So anything, I've gone from resurfaced all the way to quartz, right? So it depends. But you've got to realize, if you're buying these 80s built properties or 70s built, even in nicer areas, just because you want to put in a nice countertop doesn't necessarily mean the countertop will, the thing supporting it, the cupboard supporting it, will actually support the weight. Because a lot of times with these old cupboards, they can't support the weight of a granite or quartz countertop. So it sounds sexy to say on an investor presentation, hey, we're going to put granite or quartz countertops.
Right.
But that would mean you have to change the entire cupboard or the boards out completely. That's an additional $800. Now, is it worth $800? That's where you have to start doing the math on these things.
Right, definitely.
Just because something sounds sexy doesn't mean you've got to do it. And the other thing is, services which say, I'm not going to take the names of providers, obviously, but services that say, oh, we're internet ready. You move in and it's internet ready.
Yes,
Right? Dude, you're going to get a lot of freaking blowback from people on that, because the typical reaction, again, not always, I'm talking BC, not A, right? So just let's put things in context.
Yes, definitely.
The typical reaction is the resident feels you're trying to screw them over.
Right.
So again, it depends how you message it. It doesn't always work, but the average resident in the BC space thinks you're going to try to put one over them, and why can't I get my own internet?
Right.
So you really have to make sure that it's proven out already in the submarket.
Right. It's already been there.
Yeah, somebody else has already done it. You do not want to be a pioneer for this thing.
Right. What that is all good to know. Yeah. So those are always things that I'm always curious about. As you're talking with your property management company and whoever helps do turnovers and new rehab, has it been hard to find skilled labor in the Atlanta submarket?
Not for us.
Not for you. So it's not been a rate limiting factor at all. No. Okay. And how would you compare that to like
so far? Again, I don't want to curse myself. Okay. I don't want to go into 2021 finding out there's a labor shortage. Myth.
I know. How would you compare that to Texas, the Texas market you're in, and the Florida market you're in? Would you say
labor costs are? Look, hold on. Labor, just to put things into context, are labor costs going up nationwide? Yes, they are going up nationwide. But can you find labor? Yeah, you can find labor. You don't have to be cheap about it, right? I mean, nobody's saying you pay top dollar. Right. But this is where relationships in the market, through your property manager, how much volume of business do you get to give to a contractor, how much you stay on top of them. Because look, at the end of the day, you can find labor, you can find people willing to work. If you don't stay on top of people every day, bam, 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 if you're not the squeaky wheel that gets the grease, people will start your projects and never finish it.
Right, definitely.
So that's the same thing as not having any labor. Right? If your project never finishes, you might as well not have any labor.
Right.
So you've got to realize it's not just about finding labor. It's about making sure that you go through the process of finishing your projects on time.
Right.
So you have to balance both things together. But are labor costs going up? Yes, they are going up nationwide. Is it hard to find labor? Yes, relatively speaking, it is hard to find labor. Can you find labor? Yes, you can. It's not the hardest thing in the world.
And would you compare it to Florida and Texas, the cost of living?
I think the cost is relatively similar. Maybe one person is up on one thing, but the other person is down on something else, right? Ballparkishly, they're all kind of the same in big cities.
Okay.
Ballparkishly, we're just talking big averages here.
Right, right, definitely. Okay. I mean, here tells a story of Atlanta and why everyone's so interested in it. And, this is obviously on a macro level here, but really robust growth and continues to grow here. All CoStar data, but just looking at the big picture, I don't think anyone's going to argue that Atlanta's doing well and has done well for multifamily, right?
Yep, I love it.
And here we're just talking about, again, just Atlanta versus national rent growth and seeing how it's done. How have collections looked in your properties in Atlanta? COVID, how is year start compared to year end? What would you say in your properties in Atlanta?
Look, again, I do not want to curse myself going into
I'm not.
Holy crap, 2020 was the longest year of my life. But again, let's put it this way, if I was living in a cave, I had no context of what was happening in the world, all the job losses that have happened, all the unfortunate things that have happened, people dying, getting infected, all the human misery aside. Right. If I had none of that information, I was only looking at my P&L, I would think this was the greatest year of my life.
Wow.
Yeah. But again, you've got to put this thing into context. Class A has been offering a lot of concessions because there's a lot of pressure, right? People lose their jobs. There's a lot of pressure. Class D, those sponsors are getting cleaned out. I mean, that is depressing just to look at. There's a really big sponsor out of California, the Bay Area, and they were trying to off-market sell a couple of their properties in Class C minus D areas, and they had something like 20 or 30% vacancy with 15% bad debt. That's huge.
Right.
Okay?
Hard to make those numbers work.
If you're really top of the food chain or you're kind of downish on the food chain, you have in some shape or form suffered a lot more. If you're kind of in the middle of value, you're not the greatest value, but you're some level of a value, right? Especially if you're in a good school district.
Right.
Dude, I mean, there are ups and downs, but thank God things have been pretty manageable.
And Omar, as we're looking at, our audience is LPs who are not going to go travel and see all these places, what are you looking at for school district rankings in Atlanta? Is there something other than great schools and niche, or what, like, how do you
Look, there's a combination of things. So in my particular case, I have to go to these areas. So I
right?
know these areas. So how I would look at it is obviously a lot different than
Right.
maybe because I'm not in the LP's position, right? So for me, I have that context where the LP might not. So I might not be able to answer that question. But what I see are a couple of things. Number one, school district, and not just school district, but is, again, this is partly based on my knowledge of being in the market. There's a couple of school districts. I think it was Henry or Clay County. I'm forgetting which one. I think they're both together like this. One of those school districts has got, in the last few years, got actually, whatever is it, defunded or deregulated, some version of that. Essentially what it means is they sucked so much that their funding got rescinded. And they got warned and they didn't do anything about it and their funding got rescinded. And now they're not, I mean, now they're getting the funding because apparently they try to fix all of those issues. Well, the problem is right now those schools might look really good.
Right.
But a lot of families that had kids, there was a flight from that area for the last 3 to 5 years, because as the school board is going through, that J curve of, okay, now our funding is going, okay, now we're going to fix everything. And now our school is going to look, okay. Well, a lot of the families that were making good money, but had 2 kids or a kid and didn't want to go through all that hassle, they've left. So technically your school district could have been good, or rather right now is good, but a lot of the high-end commercials in that area have just left because they weren't going to stick around for 4 years. So that being said, typically look, if you go to great schools or any of these other school rating sites, and if you get anything around 6 or 7, preferably 7, you're doing okay. Okay. Just realize you're not going to get 10 out of 10. You're lucky if you get 9 out of 10. 6 or 7 is fine. I mean,
That's a good rule of thumb for at least Atlanta. Just
roughly,
right.
I mean, roughly, it's a good, again, roughly, but again, having more context is a lot better than less context.
Right. Definitely. And this slide is just talking about, is there anything when you're doing your insurance underwriting that you really think about for Atlanta? Like, DFW, people say hail's really big and hail damage.
Well, not really specifically in Atlanta. Look, the flood part, by the way, is nationwide. Anytime you're in a flood plain or a flood zone, it doesn't matter where you are. It doesn't matter if you're in Florida, Georgia, Atlanta, whatever, Texas, California. If you're in the flood zone, you got to get flood insurance or you got to self-insure. It's one or the other, right? So flood is nationwide. With regards to Atlanta, earthquake doesn't seem to be a big issue. Well, again, hopefully earthquake's not a big issue. Hasn't been so far. There's not a lot of hail damage. There's the occasional hail damage, but nothing like Dallas, right? Where there's a season of hail damage, right? And Atlanta, by and large, seems to have avoided the big disaster sort of. I'm talking like, what is like a tornado? Well, is there one tornado a year? Maybe on some outskirts, maybe. But we're talking big picture wise, does it rip through the city? No. But again, this is where having a good insurance broker, having relationships helps, because I'm able to just pick up the phone, call my insurance guy and be like, okay, and I got to provide them some info like loss runs and all of that stuff. And they're able to very quickly give me a quote that is about 99% accurate within a reasonable period of time.
Wow.
But that's because of the volume of business we do, right? So there's a trust built in, there's a volume of business. Plus, I know if they give me something really left field, well, I know where to push back on.
Right. And this kind of is always the other big topic is taxes. Are you going to court and
oh yeah, dude, every single thing is contested every single year.
And how are your tax estimates coming in beforehand? Are they pretty spot on, or?
Well, typically they've been spot on, but even if they're spot on, you still have to go fight that tax.
And is it pretty successful, or has it been?
Yeah, it's been some cases it's successful when you fight. Some cases it's not. But you have to realize you've got to fight every single tax bill you ever get, because the problem you have to realize this visually. If you don't fight a tax bill, the county assessor or whoever's the physical guy or girl getting the taxes, they just assume next year that you're fine with these taxes. So then it'll only go up.
Right.
So again, you got to realize a lot of this I'm talking from the sponsor's point of view, not the LPs. LPs don't have to bother themselves with it. You got to realize every single bill I get, I have to, especially from the government, if it is contestable, I have to contest it. Because otherwise, the next year, the assumption is, well, this is the base, and then we're going to increase everything on top.
Do you know, I know in one of the deals we have in Northern California, after you renovate a certain percentage of units, they'll reassess based on that. Is that true in Atlanta as well?
They can. Look, it varies from county to county. In the counties that I'm in, at least in the wider Atlanta MSA, it's called a UFA, uniform and equal, which basically means they're just not going to go off of you. They're going to go off a comp set, which is around you, your comps of properties, and they're going to use that to base your tax rates.
Okay. So
Trust me, when that doesn't work, then you fight the other way. When that doesn't work, so it's always a battle. You understand? It's not like hey, somebody gives you something and you accept it and you move on.
Right. Got it. Here, and we had talked about this offline a little bit. This is kind of the ballpark numbers from CBRE about the different class types in Atlanta. But if you were to say for Class A, what cap rates, or Class B, what cap rates you see them trading at?
4% or less. I can tell you this: 4.1, 4.2 or less.
Wow.
Right now, look, you can say wow, but you have to put it into context. You're also getting financing at 2.5%, right?
Yeah.
So the spread between your financing and your cap rate is still historically high. Because look, think about it this way. Something is a 5% cap rate, right? But your interest rate is 6%. Well, that's upside down.
Right.
You don't want to be in that position, right? Whereas something is, say, a 4% cap rate, but your interest rate is 2.5 or 3 or whatever it is. So you've got a margin of safety there. So you have to put things into context. A cap rate in isolation is meaningless because, well, what if you get financed at 1% a year? Great. And
you can do the 3%.
Get whatever assets you want to get,
Right.
So context is very important.
Cheap money, right? So cheap money driving. I guess, and this is kind of our rule of thumb statement here, but as you're looking to Atlanta in 2021, what do you see? What are you looking forward to? Which markets, and what big trends do you think are going to continue going on from 2020, or any big changes?
Well, I can tell you this, number one. I really hope your price per unit for Class B and C is accurate, because I'm going to make a lot of freaking money. That is accurate. So I'm really hoping you're correct. Personally. Hopefully I don't buy it at price, but hopefully I can sell it at that or higher price. I would be so happy. Look, what am I seeing? I am typically in the corridor, Fayetteville, Peachtree City, Newnan. Okay. On the north, I'm looking anywhere, say, from a Canton, which is kind of north, all the way to, say, Johns Creek, maybe. Because Atlanta, and I'll show you a map. Atlanta, it's called like the wine glass or the stem glass or whatever you want to call it. It's kind of like this from, downtownish, midtownish. So that kind of covers like the Mariettas and the Johns Creek and the Sandy Springs and the Alpharettas. There's a wine glass that goes all the way down, and you see it on a map. And it's not like the perfect wine glass in the world, right? And then when you come all the way to the south, there's like this little, base, Fayetteville, Peachtree City, Newnan thing. And those are some markets. So anything in that wine glass like this, or right at the base is what you
Good visual, yeah.
For Class B-ish properties. But again, you've got to realize, everything's dependent on the price you buy something at, right? So you could be in a Class D area, but if you buy it, 50% below the market price, well, you're going to make a freaking killing. So think of it in those contexts. Price in isolation or cap rates in isolation are meaningless without more information.
And do you see a lot of institutional money still coming into Atlanta?
Oh, dude, are you kidding me?
Yeah, I mean, the transactional.
So much money coming. It's at the top end, it's all institutional money.
Right.
Even at the bottom end,
the transactional volume is just huge. It seems like
Atlanta is a huge freaking market, and not just transactional volume, the amounts of trading that's happening. So I'll give you context. I was looking at Nashville, because Nashville is kind of blowing up, right? Well, the problem with Nashville is Nashville doesn't have a lot of inventory, and Nashville is still a developing market in the context of not a lot of trades happen. So you'll have a couple of big players, and they hold on to assets for 10, 20, 30 years. Whether that's right or wrong, it's a separate issue. But trading doesn't happen in places like Dallas, Fort Worth, Atlanta's.
What kind of loans they have to let them hold on to that for that long?
Well, you can keep refining or getting new loans.
Okay, there's refining on something.
You can get new loans, right? Look, my point is, bigger cities like Atlanta, Dallas, Miami to a certain degree, Orlando, Tampa, Phoenix, Denver to a certain degree. It's not just the amount of inventory they have, but the amount of trading within the inventory that's happening. Because it's no use you have the world's biggest inventory, but no trades happen. Because, well, then what do? So Atlanta has a lot of volume of trades happening, right? That's what makes it really attractive to a lot of people as well. That you can come in, you can transact, you'll always have options to buy and sell.
And you were saying in 2020, if there was a lot of transaction, there's a lot of volume.
There wasn't enough because coronavirus took away about 6 months, right? Where everybody's kind of, I mean, it was slower than usual. It wasn't like it was zero. It was slower than usual because 3 to 4 months is just, people are just trying to figure out, okay, what's going on, right? 2 months, people trying to get out. And the last quarter was just go, 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 go. But again, it doesn't make up for the first half of the year. But 2021, hopefully, you're the physician, you tell us, hopefully the vaccine is, I'm really hoping the vaccine works and it's all that it's touted to be.
Right.
But I think that will unleash a lot of pent-up demand.
Right. Okay. Sounds good. Let me see if we can, are you able to pull up the map you want to look at, or?
Sure. Let me do
and
this.
It's just Omar's contact information, which will be on the slides as well.
Yeah, so let me do this. Okay, so before I went to Atlanta, I mean, now I kind of know this. I sometimes use it. I give it to, you can see the map, right?
Yes.
Yeah, okay. So what I did is, before I went to Atlanta, I typically do this for a lot of the markets that I'm going into. You got to realize Google Maps, it's free. So you don't got to pay anybody for this stuff, right? So what I did is I told my analyst or my assistant to basically shade all the areas that have certain income subsets. And again, is this 100% accurate representation? No, this is 99% of the way there, right?
Okay.
Put it into context. Because so I'm going to put some shadings on and you'll see like where are the high or low income areas. And before I go in, that wine thing that I was telling you about is, I don't know, do you see this? You got to squint your eyes to see this thing, right? It's kind of, and it's not 100% accurate because Kennesaw's right here, right? But you see this, like if you see this, right? Cartersville all the way down over here. And then you go up like this, say all the way to where, Gainesville right over here. So all of this area, say Calhoun and then Canton's over here somewhere, all the way to Johns Creek, which is over here somewhere. That's Class B-ish nice areas. Fayetteville, Peachtree City, Newnan, this area over here.
Right.
These are very high income earning areas. And the rest are, a combination of CDs and maybe there's occasional nice area. So, okay. So before I go into a market, just for me to be able to quickly talk, because look, when I'm talking to a broker in a new market, especially now I know Atlanta, right? But in a newer market, when I'm talking to a broker and him and I are talking on the phone, or you can do this even if you're an LP wanting to talk to a sponsor.
Right.
I can't like be on a call and then somebody gives me an address and then I'm like, give that person a call 2 days later saying like, oh, is this a good area? Is it a bad area? Whatever, right? So while I'm talking to somebody, what I did is I told my analyst and my assistant, hey, what I want you to do is break up the entire zip codes in the city of Atlanta and certain census tracts by median income. So, and you can do whatever you want, but how I broke this down is sub 40,000, 40 to 60,000, 60 to 90,000, and $90,000 and plus. Okay. Because this way, say, let's assume Myth is, say, a broker, and he's telling me about a property, and I look up what the address is. While Myth and I are talking, and I'll show you how what to do, you can basically do this, right? So let's do this. This, as you can start seeing, is sub 40%, right? Now I go down. We go 40 to 60. Now this starts filling up.
Yeah, wow.
Right? 60 to 90 starts going up. 90,000 plus. So as you can quickly, again, like say for instance, this pocket we have to fill out. But as you can see very quickly, if I have the address of someplace, to a reasonable degree, I'm able to kind of figure out, okay, what kind of income do people make in this area? Right. Then this submarket shading is more for me if somebody, I just wanted to find out where the submarkets are. And best elementary school, again, best is kind of a relative term, right? I meant like 6 and 7 plus. You can you can see how they're skewed, right? Because I told you the northern suburbs are very nice. So you can see a lot of this is skewed in the northern suburbs, right? There's a couple over here that we haven't. Oh, and I told you the southern suburbs like Fayetteville, Peachtree City, and Newnan. So you can see they're all centered.
And which one was the highest? The color which is the highest income was blue? Was that?
No, it's green.
It's green. Okay. Because some of the blue ones actually have really great school districts, which you would think.
No, they do. But you also have to realize the green one, it's never a 1-for-1. You have to realize, right? Because it's not like whatever the board is to create the school district. They don't go by my definition of what's a good area. They have other things they have to look out for. But again, this is a rough approximation because you're never going to know 100% just by even looking at this map, You can't, because there's so many things going on, but it gives you context. So like I talked, northern suburbs, really nice. Now, nothing kind of happens over here, right? But now you get to Fayetteville, Peachtree City, and Newnan. You got some really nice schools. Gives you context.
Right.
Again, the reason why you want this context is just to start getting a better understanding of what's going on. But what you also want to do is, while you're on the phone, while you're talking with somebody, while a conversation is going on, you are able to simultaneously look at something, get context, and then be more equipped to ask either questions or to follow up on that conversation with somebody. Right? And similarly, like, it's not just schools in isolation. What's the path of progress? Path of progress, I kind of define as schools, Starbucks, all that sort of stuff, right? So you can see Whole Foods, Starbucks is, wow, there's a lot of Starbucks.
Yeah.
Different sort of, bars, eateries. Publix is a very big grocery store.
Yeah.
Chick-fil-A is, by the way, headquartered in Atlanta. But Chick-fil-A they've got one of the best real estate teams on the planet, I think. Right.
So when you look at these, if you saw something new under construction,
I'll just tell my analyst to add it.
No, but would you say which one would you be most excited about? Being like, okay.
See, most is kind of, I can't really say. Again, I'd love to give you a very clean answer. Hey, do this and then you're done. Yeah. Right. Most is, I can't really say that, because the thing is, a lot of times these things happen in clusters. So you might have, say, LA Fitness, or say a Whole Foods going up in one place. And 6 months later, you might have a whole bunch of really nice bars or restaurants or retail happening there. Because things happen in clusters, but people tend to follow each other.
They pile on, right? Like
they pile on, right? So let's assume the city announces a big hospital chain is moving to a certain part of the city that used to be, say, previously neglected. So now if you look on the median income stats, it might say, oh, it's sub $40,000. And you'd be like, well, why the hell would I want to go there? Well, the issue is the city is now going to put $300 million into revitalizing that area. So if you get in there at the right time, you can ride that wave up where the city is just doing all the work for you. And all the people are moving and all that thing is happening. So this, what I told you, is for you to get context, right? But again, nothing beats learning the market. And again, there's a lot of pieces of the puzzle you have to put together, and no one information is paramount. But say, when you've got 8 out of 10 of your indicators pointing in one direction, that's a pretty good sign. Right? So context is very important, is what I'm trying to say. Definitely. Cool. So that kind of gives you an idea. And again, just to emphasize, this is all free. You don't need to pay somebody to make these things.
Right.
If you were so inclined, you could do it yourself.
Right. Definitely. Well, that helps having an expert's opinion about Atlanta, because it's definitely a market which we wanted to learn more about and kind of understand on a deeper level. I think we'll be able to get there. Thank you so much.
And I hope I was able to help.
Well, yeah, absolutely. Thanks so much, Omar, for your time. And we should talk again soon.
Yep. Thank you so much. Talk soon. Bye.